I'm sure you already know by now that buying and holding is not the only way to make money from crypto. There are other ways, and this particular method will give you gains very quickly in a matter of minutes or hours. In today's video, I'm going to be showing you how you can make money from crypto by trading futures. Hey everybody, my name is Kyle and I run the WealthWiz channel where I teach you how to make money online in the simplest way. Make sure to subscribe to this channel and don't forget to click on the notification bell. So whenever we upload a new video on how to make money online, you'll be updated and can start making things happen. Also, please give this video a big thumbs up, and if you ever have any concerns, questions, or opinions about the video, don't be shy. Just leave a comment down below. Now let's get into the video. In many aspects, crypto future trading differs from spot trading in that it does not require players to own any assets. Rather, traders look to buy or sell derivative contracts which represent the value of a cryptocurrency at a future date. Future trading, in essence, allows investors to speculate on the cryptocurrency's future value. Traders might go long to bet on a price rise or short to bet on a price fall. The use of leverage is one of the most important advantages of future trading. Leverage allows for better capital efficiency as traders do not have to lock up entire amounts of capital. It raises both the possibility of gains and risks, which is why you must constantly be cautious. If you are new to future trading, a leverage of 2x or 5x would be appropriate. Traders that seek to employ crypto derivatives as a protective hedge for their portfolio would benefit the most. A futures contract hedged against the event with a specific degree of leverage can compensate for the loss if any asset performs poorly or contrary to expectations. Traders can obtain exposure to cryptocurrencies through futures contracts such as USDT, margined futures, without having to own the underlying asset. It's comparable to stock indices or commodity derivative contracts, in which an investor can speculate on an asset's future worth. As a result, a crypto futures contract value is determined by the digital asset it represents, such as Bitcoin or Ethereum. The trade is settled in cash when a crypto futures contract expires rather than the actual digital asset. The most important feature of crypto futures trading is that it can safeguard investors from market volatility. Short selling allows traders to profit on price differences by selling high and buying low. In essence, crypto future contracts allow market participants to benefit regardless of the underlying asset's price movement. On derivative trading platforms like Binance Futures, crypto futures contracts can be traded at any time. Because of the significant volatility involved with derivatives trading, traders must manage their risks carefully, and learning the fundamentals of crypto futures is crucial before investing. To open a futures position, you'll need an initial margin. When using a futures trading account, it is the percentage of the notional value of the futures position that must be covered by BUSD or other collateral. Maintenance margin, on the other hand, is the minimum amount required by investors to keep their trading positions open. Continuous maintenance margin checks aid margin utilization calculations. All your open positions will be liquidated when your maintenance margin limit is reached. The first thing to understand is that these contracts allow traders to benefit by properly predicting the price direction of any cryptocurrency without having to buy and sell it directly. Consider the ETH-USD pair. You can choose the direction in which you believe the price will move on any exchange that supports futures trading. You're basically betting that the price of ETH will rise in terms of USD if you long or buy these contracts, and you're betting that the price will fall if you short or sell. Let's say you want to buy a sum worth 1 ETH. That implies you profit $1 for every dollar ETH grows in value, minus the fees. You can keep your contracts or positions open for as long as you like because perpetual contracts have no expiration dates. You can choose your trade if you're happy with your profits, and the exchange will pay you in stablecoin like USDT right away. You can profit from ETH price swings in the way without ever having to buy or sell the cryptocurrency. You only need to predict the direction in which the crypto will move. The exchange platform will use various methods like funding fees to ensure that the price of ETH and USD contracts always track the price of genuine ETH. Similarly, the platform will pair you up with the counterparty. So whether you're longing or shorting profits and losses, they are instantly dispersed and subtracted as soon as you close your position. Now the first step to take in order to get into futures trading is to choose an exchange platform. When choosing a futures trading platform, make sure it's easy to use, provides a variety of order types to help with risk management, and has reasonable fees and commissions. Advanced traders may prefer a platform that allows them to access an application programming interface (API) for algorithmic trading. You should also choose a futures platform that has a mobile trading software that allows you to execute trades and manage positions while on the go. Some top platforms for crypto futures trading include Binance, Femex, Bybit, and KuCoin. After trading an exchange, the next step is to develop a trading plan. The fundamentals of crypto future contracts are quite straightforward. Now that you understand how these contracts work, you can move on to develop a responsible trading strategy. A basic trading plan should have a strategy and proper risk management. There are many books and videos on trading strategies, so you can pick up one and digest it properly. Technical analysis is now considered a necessary skill for all traders, and you should be able to find profitable entry and exit positions by employing a variety of technical indicators that measure various characteristics of the market. Algorithmic trading operations use the same tools and principles as traditional trading operations. Trading volumes, moving averages, and Bollinger Bands are examples of indicators. I can't give you specific trading recommendations, so do your own research and learn to analyze the market very well before you start trading futures. Another good approach is to practice your strategies on a demo account before using real money. Some exchanges like Femex offer simulated trading accounts that let you practice with virtual funds until you are ready. Risk management is the most crucial part of any trading strategy, especially when leverage is used. You can use leverage to take on positions that are much bigger or more valuable than your initial investment. Using the earlier case, if you have enough cash to open a position for 1 ETH, you are allowed to leverage up to 125x. Now let's assume that you pick a leverage of 20x. This will make your position worth 20 ETH. However, as your potential for profit increases, so does your danger for losing money. A price movement against you will also be substantially multiplied by 20x, meaning that even slight unfavorable swings can completely liquidate your investments. Stop loss orders are essential when using leverage because of the increased risks. After a certain predefined threshold is met, a stop loss can automatically close your positions and mitigate your losses. Before you open a position, be sure you understand the risks and stay safe. Finally, and this is very important, as much as futures trading can help you make a lot of money fast, it can also help you lose a lot of money. It is a typical high-risk, high-reward situation, so make sure you develop a trading strategy, learn technical analysis, and understand good risk management before you dwell into futures trading. Would you be trying futures trading? Let me know your thoughts in the comment section. And that's it, guys. This was Wealth Wiz. We upload new money-making videos every week, so please make sure to subscribe to the channel and click on the notification bell. Smash that like button and I will see you in the next video.
I know you told your friend you're not okay, and tell me what's wrong and why you never said you felt that way. And guess you're trying to stay strong and fake a smile until I look away. But I've known you too long, it hurts to